Hello everyone, and welcome to this specialist trading presentation of our Elite Forex Trading College. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading, and I'm very excited about the presentation today because I'm going to be talking about a program that we've only offered once before in the 7 years that we've been around. For those of you who are new to our presentations, Specialist Trading is first and foremost an educational company. We provide all of our members with strategies, tips and techniques, insights and wisdom, as you see here, from the floor. I started my trading career on the floor of the Pacific Stock Exchange a little over 30 years ago. I've been trading for 38 years. I've been in the business for 38 years, and I was on the floor of the stock exchange for 16 of those years, and I was a specialist for 9. So I've seen and traded through just about everything imaginable, from the crash of '87 through the bull market after that. I've traded every type of technique, method, system, strategy. I know what works. I know what doesn't work. And by working, I mean what has consistency and longevity to it. Roughly about 7 years ago, once again, I was asked to train and to teach students all the things that I currently have accumulated and use in my own personal account. So that's where we started Specialist Trading. So once again, we are first and foremost an educational company where I instruct you and fill you in on all the things that I've seen in my 38 years that have a level of consistency to them. Now, before I go into detail about what is going to be offered in our Elite Forex Trading College, I ask that you please take a view at our disclaimer. I'm going to show you some performance results with the tips and techniques, the edges, and the strategies that we are going to be offering within the course. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So we're required to show you this. So as you're taking a moment to view our disclaimer, also want to invite each and every one of you in attendance today to follow us on Twitter. There is our handle there. You may want to write that down. It's at SPCLSTRADG. Two T's, excuse me, LSTTRADG. That's abbreviation for Specialist Trading. I post free information on a daily basis. In fact, just a week or so ago, I posted a great signal we had on the Canadian dollar. So even though we do not tell you exactly where to get in and where to get out, we let you know and we're made you aware of when we are in a current position. So feel free to follow us on Twitter. As well, you can also like us on Facebook. Now, Pro Trader Strategies is our sister site. They market and promote all of my courses and strategies, so you can follow them on Facebook by simply logging on to Facebook and going to protraderstrategies.com. A lot of great information there, as well as some great videos, okay? Now, I noticed there are a lot of new people. In fact, I see someone all the way from Montreal, Canada today joining us. What I want to do is first start out and share with you a little bit about the philosophy of Specialist Trading. As I stated, we're an educational company. As you see here, my goal is to teach you how to trade with the Specialist Edge. And I make really a strong emphasis about that because we're not trying to trade for you. In other words, we're not trying to just simply generate buy and sell signals and tell you to buy this and sell that. Because it's been my experience in my 38 years of trading that that is really a recipe for a disaster. What most traders do, especially new traders to any market, but most especially in the Forex markets, is because they don't really understand how they work or they seem a little complicated. They want someone to do the work for them. And that's what puts everyone in that 80% percentile group, which ultimately fails, meaning that you give all of your money back. I know what it means to lose because firsthand, because when I was trading on the floor of the exchange, my first couple of years trading, I was very discouraged as well because I couldn't seem to get going in the right direction. I would have a number of good trades followed by one terrible trade where I gave everything back. This is the way most traders trade. Usually it's because you're overcomplicating your trading. Also, and I think most importantly, you're taking yourself out of the game, meaning you're relying on someone or something to tell you what to do. I mean, look at the way you trade personally right now. Are you focusing too much on TV? Are you focusing too much on some guru or some trading room or chat room telling you where to buy, where to sell, or some system that you have no idea how it works or what it's based off of? See, we don't believe in that philosophy, and I've said this through firsthand experience. That's the way I used to trade, and that's why there was no consistency when I used to trade that way, and that's why I don't teach any of that with my students. What we teach are sound fundamental techniques that have stood the test of time, and then we work with you to mold them to fit your needs so that you can ultimately get on that road to consistency. So we're an educational company. We don't keep statistics. We don't, rely on any type of numbers or back testing, because we know that everyone trades differently. Okay? So with that said, let me share with you what I learned on the trading floor. Once again, I was on the trading floor for a total of 16 years. I struggled tremendously my first year or two. But going into that, I was able to finally get a hold of a couple of mentors who had been trading some 30 or 40 years. And here's what they explained to me and what finally got my trading on track. They said, Steve, successful trading should be non-subjective. All right, so what do we mean by non-subjective? Well, how many times have you looked at a chart or talked with a friend or a fellow trader about a specific market and had two entirely different ideas about what you thought was going to happen? This happens all the time. It's because everyone's subjective. Everyone brings their own issues to the marketplace. Everyone says, well, my guy says that it should stop here. And no, these guys are saying it should continue going more. Everyone has a different opinion. Trouble is, it's all subjectivity. All right? We want trading to be black and white. We want everyone to look at the chart after you get this knowledge and information and come up with the same idea. In other words, saying, well, we're in an overall downtrend or an overall uptrend. So you know exactly that we're all on the same page. All right? So trading should be non-subjective. It should also be consistent. And what does that mean? Well, it means that we're not going for home runs. So many traders, that's the only thing they think of. It's like, boy, I'm looking for that big score. It's like that jackpot. I'm looking for that big hit. And that really will ultimately lead to failure as well, because you're really not basing anything on a sound technique that has some type of longevity or sustainability to it. You're looking just for a big fly-by-night score, almost as if you were going to hit the lotto that night, and then that's it. And that's not the way trading should be. Trading, rather than hitting home runs, should be about hitting singles. 2 steps forward, 1 step back. So that's what we're looking for, techniques that give us that consistency where we know that over time our P&L will have this nice upward slope to it. We're not looking for these huge big spikes up where we made tons of money, because we know just as easily we can give it all back. In fact, when I traded on the floor, I knew lots of traders that made hundreds of thousands of dollars, if not millions of dollars, in a relatively short time. And guess what? Not one of those traders is trading today. Why? Because they've given everything back. So that type of trading could not sustain them. So this is what we're looking for. We're not looking for any type of long shots. We're looking for consistency in our techniques. Also, my mentor said that successful trading should be as simple as possible. In fact, go back and look at, if you've had any other educators or any other traders before that you've listened to that have been trading, usually the traders I've found in my experience that have been trading for anywhere a relatively short time, from 3 to 5, 7 years, which is short for me, in my opinion, most of their trading plans are extremely complicated. They've got some convoluted logic. They've got some indicators that only they know what they are. They're extremely difficult to understand. They don't work all the time. They have no consistency to them. But there's extremely complicated things with their trading plans. Now, if you look at the people that have been trading 30, 40, even 50 years, most of their trading plans have maybe 4 or 5 rules, and that's it. Maybe 1 indicator or no indicators at all. They can write down their trading plan on the back of a napkin. That's how simple it should be. And these are the traders that have consistency, because they've learned to strip away all the noise and conventional wisdom that really has no consistency to it, and just focus on the things that have worked over time. This is what we teach you as well. So my mentors taught me this as well. And then lastly, and most importantly, as I stated earlier, successful trading should make you a part of the process. In other words, you should have a say in your trading. That's why we don't believe in any type of statistics at specialist trading. We don't trade systems. We don't believe in trading rooms or chat rooms. Why? Because they're crutches to make you just rely on something to tell you when to buy or when to sell. And that takes you out of the game. We want you making the final decision. We want you using all of the tips and techniques that we provide for you, and then coming up with your own decision. Now, most traders that we have at Specialist Trading take the core of our strategies or core of our methods, but then use the basics, but then decide to trade them a little bit differently. All right? Some traders may trade the same core. They may trade it conservatively. Others may trade it more aggressively. Others may use a different entry placement. Others may use a different stop or exit placement. So even though they're using the same basic foundation that generates a strategy signal, there are becoming part of the process by deciding how they want to trade it, how they want to manage it. Remember, once again, it's our philosophy that no two traders should ever trade alike. That's why there's no way we can keep any statistics, or there's no way these are systematic trading. They're all strategies because they keep you a part of the process. Just think of, to make it simple, if it's difficult for you to understand that process, think of driving. Everyone who's in this presentation today probably drives a car, okay? But look at the car you have. Most likely none of us have the exact same car. You know, if everyone, cars just do the same thing. They take us where we want to go. So if that's all we cared about, then why wouldn't we all drive the exact same car, the exact same model, exact same year? Because we want to be a part of the process. We want to be a part of the decision making of how the car looks, of how the car drives, because each one brings a little bit to the table. We're all going to end up at the same place once you get inside the car, but everyone wants their car a little bit different. It's the same way with trading. You shouldn't be trading the exact same way. You should treat it as if it were a car. It's your own personalized car, okay? Now, before we go into the details of the Forex calls, just let me make a few announcements. I'm going to share with you what's involved in the courses. I can't give away all of the information. I'm just going to share with you what we'll be teaching you. But if you have any questions, kindly wait till the very end of the class, and I promise I'll get to them just in about 15 or 20 minutes from now, okay? One question I will answer, which almost everyone always asks, is this being recorded? Yes, it is. All of our presentations are recorded. So if you're interested, if let's say you came in late, or let's say you have to leave early, you can contact Pro Trader Strategies. I believe their email address is up, or you see in the chat box. You can contact them, and they will send you a link to the recording. Okay. All right. So that's a little bit of philosophy about specialist trading, and let's start off by looking at the reasons why most traders will enter into a trade. Okay. It doesn't matter if you trade intraday. It doesn't matter if you trade daily bars, or it doesn't matter if you're a position trader. All right. Here are the top reasons why most traders enter into a trade. The currency pair is too low. Okay. You've never seen it this low before. Okay. All the signs tell you that we have to be making some type of bottom. So you get in because we're tremendously oversold. Okay. Or it's the opposite. The currency pair is too high. You've never seen it this high before. It's gone up way too high, too fast. It's tremendously overbought, and you have to take advantage of this and sell it. All right. Or perhaps you enter because of what a Forex trading guru told you. All right. He said he's either on TV or in some trading room or some chat room and says, no, here's what we're going to do, so you're going to mirror my trade, or what we call piggybacking in the business. Or how about you're a technician, and all of your indicators crossed over, everything is aligned up perfectly, so now that's the only way you can enter into a trade. If everything matches up, if all the stars align and all the indicators align up, that's your trigger to enter into a trade. Or let's say you listen to TV commentators. You have the TV on all day long, you're listening to what they say, and you can't make a decision until you listen to the guy on TV talking. Or then finally, and lastly, and the most important, I believe, aspect of why traders enter into a trade is from fundamental news or reports. How many of you wait? You can't make a decision until you see what the jobless claims are, or what you see what some economic report is going on around the world, or something that you cannot make a decision to until you see that come out. See, the reason why most traders make their decisions based off of this is because you're relying on them to tell you what to do. Either the indicator or some guru or some news event is going to tell you whether you should be buying or selling. And let me show you how that works. And once again, I'm not saying this to be arrogant and condescending. I'm saying this from firsthand experience. This is the way I used to trade. I even traded this way on the floor. I had tons of indicators. We didn't have trading rooms or chat rooms then, but I had newsletters that I subscribed to. And I was following all the news events. In fact, I want to share with you this. It's an older news account in the British pound, but let me show you how this worked. Okay, this was an older news account last year where it said the British pound is approaching significant resistance. British pound is approaching a significant area of resistance between 0.6050 and 0.6165. The lower end of this range corresponds with the previous support resistance level visible on the daily chart, while the upper end marks the left shoulder of a head and shoulders pattern on the weekly. There is also a long-term bearish trend line going through the above range, which is also very significant. In addition, there is a 78.6% Fibonacci retracement level of the April-June rally coming in at 0.60 6075/80. So you've got about 4 or 5 reasons why we're approaching significant resistance. Each one is valid, right? I mean, you have Fibonacci, you have head and shoulders, you have news events, you have support and resistance. Everything in the world tells you from this statement here on a blog, I believe, that you should be either getting ready to exit the British pound or don't consider going long, or if you're more aggressive, consider shorting the British pound. So if we look at the chart here, this older chart, this is where the British pound was. It had been rising, obviously, and here's where the so-called resistance was. Now, had you listened to this outside source, remember, telling you what to do, guess what? You would have missed all of this. And had you shorted, well, you would have had a nice loss on your hands, okay? So this is why we say there's too much subjectivity when listening to news, because people can interpret it differently, and there's no consistency to it. So we don't rely on outside sources to tell us what to do. We only listen to one thing. That's the market. And we listen to what the market's telling us, either through using maybe one indicator, which is probably on every charting software package, or through our patterns, things that I've accumulated in different patterns that are simple to see, but why everyone bypasses them, because it's just too simple. We've been taught that the more complicated a strategy is, the more valid it will be, when it's actually the opposite. It's the simpler things that seem to have consistency over time. And if you just listen to the market and to a few of these different patterns that I teach in the course, well, you would have been privy to a couple of really nice buy signals earlier in the British pound. All of our members of the Forex College would have been able to take these long signals. So this is why we don't believe in news. We don't concern ourselves with news. We don't concern ourselves with systematic trading where everyone has to trade the same way each and every time. We don't concern ourselves with any type of numbers or statistics, because we know that everyone has to approach the market differently. But as long as you have the same basic core of these things that have stood the test of time, you will be on that road to consistency. All right, so we need to give you a couple of edges in our course. Let's tell you about a couple of the most popular and the most powerful edges that we have. And remember, if you have any questions, we'll get to them in the last 15 or 20 minutes of the presentation. So hold off on the questions for right now. Now, the first edge we're going to give you in the course is a simple tool designed to place you on the right side of the market. It works in any market, any time frame, and in any direction. You can apply it to any currency pair. I know a lot of people will be saying, well, Steve, this is probably just good for daily bars, right? I like to trade intraday. Guess what? It works on intraday too. Now, I'm going to show you an example using daily bars, but this is the way most traders trade, once again. As we see here in this chart of the euro dollar, this older chart last year of the euro dollar, it's going straight down. All right. Let's say somebody in your trading room or your chat room told you that no, it's gone way too low. All the indicators, all the signs, all the support and resistance say that we've hit some type of support here. It's tremendously oversold. You have to jump in and buy. So you jump in and buy, and look what happens. Okay. Look familiar to anyone? Well, this edge that we give you in the course would have kept you on the short side. In fact, it never would have even generated a buy signal. It would have continued to tell you that the euro dollar is going lower, most likely. It works the same way on the upside. Here's this older chart of the British pound. In this scenario, the British pound has been going higher. Now, let's say someone in some chat room or on TV told you to short it because this is where it's going to top out. Actually, it's already looks like it's hit a top, so you want to get short before it falls out of bed. And then look what happens. And just a couple of weeks later, it's making brand new highs. All right. This edge that we give you in the course would have kept you in long in the British pound and would have kept you looking for buy setups in the British pound. So you would not have been short in any way. How about another edge? Okay. This is a simple technique designed to fine-tune your entries, resulting in high percentage trades. Okay. So this is not a system. It's not a strategy. It's just an edge that you can apply once you learn how to use it and implement it. You can apply it to any strategy you currently have, and we really feel in all confidence that it will increase your odds for success. It's simply a technique that I learned on the floor designed to fine-tune your entries. All right. Now, what we feel the problem is with most traders is that many times they're on the right side. They actually have a good idea. It meets all of our requirements. It's just their entry that's faulty. In other words, looking at this weekly chart of the dollar yen, let's say you looked at this and said, well, this is a top, but if we break through, I want to jump in and buy here. And that's where would be your point of a breakout buy. So you see on the next week that we did break out. So you jump in and buy, and you're excited because you've got a nice profit on paper, and you think it's going to continue to go much higher. But then look what happens. It falls out of bed in the next few weeks, and you've given back everything you made on paper, and now you have a substantial loss. Well, perhaps it wasn't the signal, it was just your entry technique. You got in a little bit too early. With this technique I teach in the course, here's where you would have entered, right here. All right? We still think that the British pound is going higher. We just have to fine-tune where we enter, and then look what happened. So it was right to be long the British pound on a weekly time frame, the dollar yen. We just had to fine-tune our entry. This is all taught in the course. Now, we also teach you different exits. Remember, we're not giving you systematic trading where everyone has to trade the same way each and every time. That's why we don't have statistics. What we're doing is giving you a full recipe so that you can put together something that meets your needs. So we have a variety of both aggressive and conservative exits in the Forex College. Let me share with you just a few of the techniques here. Here's an older chart of the British pound. This was an actual strategy that our course members would have gone long on. It generated a buy signal. Now, if you used one of our standard exits, you would have exited right here for a nice quick gain, all right? But let's say you wanted to stretch out some more profits. Well, you could have exited at exit number 2, right, based on different parameters. And if you wanted to squeeze as much profit as possible, you would have used exit number 3. These were all valid signals. We teach you how to calculate and come up with these in the course. And there's a number of different ways to trade them. Let's just say you wanted to get in and out rather quickly in a couple of weeks. Well, you could have exited your entire position at exit number 1. Let's say you wanted to exit part of your position at exit number 1, part at exit number 2, and part at number 3. Let's say you felt confident right from the start that the currency pair was going much, much higher. You could have exited everything at number 3. And then lastly, let's say you're using the exits at stop placement. So in other words, once price got up to exit level number 1, you would move your stop to unchanged. Once it got up to exit level number 2, you move your stop to exit number 1 level. And then once you got up to exit number 3, you would sell your entire position. You see, I've just given you off the top of my head about 3 or 4 different ways in which to trade this. Once again, you can decide any way you want to. There's no way, we're an educational company. There's no way we can keep statistics on each and every one of the different ways in which to trade. So this is why we teach strategies and not systems. We also give you a number of ways in which to incorporate stops. In the course, I will give you 4 initial stop placements, different places in which you can decide on your own. Remember, we want you to become a part of the process where to place your stops. We also give you 3 moving stop placements. So once you're in the trade and it starts to go in your favor, rather than just exit, you can use 3 different techniques that I was introduced to on the floor on how to move your stop while you have a nice profit in place. And then lastly, we get to the strategies. I know this is what you're probably all and most interested in. You want to know exactly, well, how do we actually trade this? What are the strategies? Remember, we are giving you the basic foundations. Even though the strategies come complete with entry, exit, and basic generic stop placement, we're giving you the foundation. We want you, after you've gotten everything in the course, to decide how you want to trade it. You do not have to trade it the standard generic way. There's a high level of consistency just by simply trading it generically, but you can increase your odds by making it fit your needs. Now, we give you 3 of our most consistent strategies for the Forex in this college. The first strategy we offer you is Forex strategy number 1. This is a great pullback strategy, probably our best pullback strategy to date for trading this market. In fact, let me show you a current signal that was generated. Once again, we're looking at a weekly chart, but this strategy works on any market, currency pair market, any time frame, any direction. We're just sharing with you a weekly scenario since we know a lot of traders like to look at different time frames. This was last October, so 3 or 4 months ago, and as we see, the dollar yen was heading much higher, but then it started to top out. As we see here in the beginning of October, we had a nice sell-off this week, and then it continued lower. Now, most people, once again, listening to outside sources, probably would have said, well, the dollar yen has topped out. It's time to get out. In fact, you should be looking to go short. We don't care about what these other people or techniques or indicators think of because there's no consistency there. All we do is listen to the market, and according to our simple requirements, that have stood the test of time, they were telling us that we were still in an overall uptrend, and all the dollar-yen was doing was pulling back on a weekly time frame. So therefore, this was just a simple pullback, and it generated a buy signal on the second week of October. So had you taken this signal, look what would have happened. In the next 3 months or so, now we're not saying you would have held this long, but you had the opportunity to gain 1,300 pips from middle of October to current conditions right now. All right, this was strategy number 1. You'll get all the rules to trading this in the course. Now we go up to one of our most consistent strategies, strategy number 4. The best thing about this strategy is that it can easily be transferred onto any market, any time frame, in any direction. So where we just looked at a weekly time frame, let's look at a 4-hour chart. Here's a 4-hour chart of the euro dollar. As you see here, it states the beauty of strategy number 4 is that it can be applied to any time frame. So I could show you a bunch of examples on daily bars, but I wanted to show you this in particular because according to the strategy, it was obvious that the euro dollar was in a downtrend. So since it's in a downtrend, all we're doing is looking for sell setups. Now, if you'd like to get more sell setups, you simply go to a intraday time frame, a 4-hour time frame if you like on this, and these were all valid signals generated to go short using strategy number 4. And this was all going up until the 23rd, which was just last Friday. So the last signal, I believe, was generated on the 22nd. Okay? Once again, we teach you all the rules to that in the course, one of our most consistent strategies, strategy number 4. Then we go to our premier Forex strategy, that's strategy number 5. This is a strategy that was designed specifically for the Forex markets. It still works great in other markets, but we really feel that the most confident with it with the Forex markets because we see such high levels of consistency. If we look here, here's a daily chart of the Canadian dollar coming into this past week. Now, obviously, the Canadian dollar has been going higher. Looking back in hindsight, though, it's easy to say, well, yeah, sure, you should have been long. But while we were going up, look at these signals that were generated on the 27th of November to go long, on the 10th of December of last year, and then just on the 20th, which was just roughly about a week ago, just a little over a week ago, there was a signal generated to go long the Canadian dollar. All the members now who are members of the strategy number 5 course were privy to these signals that were generated. So this is a great strategy for trading specifically the currency pairs. Now, as I stated, these strategies work best with currency pairs, but the beauty is they can also be applied to stocks, ETFs, futures, and commodity markets. So if you not only trade currency pairs and you like to trade futures markets or you like to trade ETFs, guess what? These strategies work well in those markets as well. So let me show you an example of commodities. Let's look at a current chart of crude oil coming into the second week of January. Obviously, crude oil has been going lower. The only way you could have really lost money trading crude oil was trying to pick a bottom. But our strategies generated sell signals in crude oil all the way back to August because of the tools in the strategies. They were deeming that crude oil is in a downtrend. And just going back to October, look at all these signals that were generated to go short crude oil. The same strategy rules, the same requirements, the same generic template that you can apply for currency pairs were applied here to crude oil. So once again, you're getting these strategies that can be applied to any market, any time frame, in any direction. Now, along with the strategies, along with the numerous edges I give you that I've accumulated in my 38 years, I'm also including 2 extra bonuses. These are really premier things here that have really helped my trading tremendously over my years, 38 years of trading in any market, and they've really, more than anything, really gotten me on that road to consistency. The first one is the ATM. That is our Advanced Trade Management. The second one is the PET-D. This is a formula that was introduced to me on the floor of the exchange that we've now made into a color bar algorithm. Let's start off with the ATM, and that simply stands for Advanced Trade Management. Now, what it does is it helps you with drawdowns. I'm not going to sit here and tell you that every strategy works 100% all the time. It's just not natural. Nothing does. If anyone tells you that, you should run because it's just natural for something to go in some type of slump because that's all it is. And what it just usually means is that your current strategy that you're trading is out of sync with market conditions. All right? So this is where the ATM helps you to become a part of the process because many times it will keep you out of those faulty conditions that your current strategy is trading through. Let me show you an example here. These are actual signals in the euro dollar, and this is what we all strive for. These were actual sell signals and one buy signal here, where they all worked out perfectly. Everything seemed to work. The minute you got in, it went lower. The minute you got in to buy, it went higher. And this is what we all want. But we all know that from time to time, later on, that same year in the euro dollar, you can get signals like this. The beauty of the ATM is that it will tell you through the market conditions, it will discern through a specific formula whether you should be trading in those current market conditions. And it many times will keep you out, and then once it discerns that the market conditions have changed, it gets you back in. So that's the beauty of trading with the ATM, and we teach you that. In fact, we only provide the ATM for course members. This is not a separate sold course strategy where you can buy this or purchase this separately. It's only for people who get the entire college course. Now also probably our most popular technique that we have at Specialist Trading is the PET-D, which is short for the Primo Early Trend Detector. As I stated, this was a tool that was introduced to me some 30 years ago on the floor of the exchange. The only trouble was it was a calculation that must be made after the close of each bar. Therefore, because we didn't have high-speed computers or programmers, we couldn't use this for intraday trading. We could only use it for daily bars because it wasn't really difficult. It was just cumbersome to decide how to calculate this indicator. So basically what we did was we just used it on daily bars. But now that we have high-speed computers and now that we do have programmers, what we've done is we've formulated it into a proprietary color bar algorithm. So it's much easier to use. And when I say proprietary, I'm sorry, this is the only tool we have at Specialist Trading that is proprietary, because we have hedge fund traders and some institutions that use this and actually are very interested in acquiring it just for themselves. But for right now, we are having it in the course for all of our course members. So what we do is we color the bars according to this calculation. And when you see a series of green bars, it simply tells you that the short-term uptrend is now in place. And when you see a series of red bars, it means that we now have a short-term downtrend in place. It's that simple. All right, so if we apply that, we can see that the beauty of the PET-D is that it tells you which direction you should be trading. And once you know that, you can apply it to any strategy and to any direction. So as we see in the Canadian dollar, since all of the bars were green, there's no reason why we would think it's going to top out. All right, this chart went all the way up until just a few weeks ago. So even when you had a couple of days that sold off sharply, the bars continue to remain green. And you can apply this add-on that we give you also comes with the course. It automatically colors your bars red or green. As we see here in this chart of the euro dollar, all the bars were red. So even though you had some sharply up days, there was no reason for you to go long. Why? Because the bars remained red. You can also apply this to your long-term trading if you like. Here is a monthly chart of the S&P index. All right, we see all the peaks and valleys going back some 25 years in the S&P index. All the times we made the tops and all the crashes that happened. Well, once you apply the PET-D, you see that when the majority of bars are green, it tells you to stay in the market. When the majority of bars turn red, you get out or on the sidelines. And you think this could have helped you this past 20, 25 years using this as a long-term tool. So here's what's included in the Forex College curriculum before we go into question and answers. Week 1, we go over the foundation and the building blocks of Forex trading. So we give you all these different edges I've accumulated in my 38 years. We give you all the techniques and the tips, things that will really give you that level of consistency in your trading. We tell you what to rely on and what not to rely on, how to simply strip away the things that you've been taught are supposed to work, but how you've probably seen in your course of your trading that don't have any consistency to them. Then in weeks 2, 3, and 4, we introduce the strategies. Forex strategy number 1, a great pullback strategy. Forex strategy number 4, one of our most consistent strategies to date. And then Forex strategy number 5, designed specifically for the Forex markets. Week 5, we go over the PET-D. We show you how to apply it, how to implement it. We also give you 4 different techniques in which to trade with it. So along with the 3 different strategies, you're also given some techniques that apply only with the PET-D. As well, we teach you a stop placement technique when using the PET-D. And then lastly, our last week, and these are all live classes, the last live class is where we go over the ATM, Advanced Trade Management, and then we put everything together. So everyone in the live class can ask me as many questions as you like, and then we go over everything to try and mold a scenario or some type of trading plan that perfectly fits your needs. This is all in the 6 weeks of the live course. Now, also, we'll be getting email alerts, okay? Now, we don't want to give you these alerts so you can once again rely on them to tell you what to do because, as I stated in the opening session, that goes against our philosophy. But we do provide you with email alerts so that you can use them as a learning tool. In other words, if you're learning how to discern when a strategy has generated a signal and you're still, getting yourself used to and getting your feet wet with the strategy requirements, once you get an email alert, at least you'll know that you're on the right track. You'll know where the basic generic buy is, where the basic generic exit and stop placement is. So you see here, just about 3 weeks ago, a signal was generated to go long the Canadian dollar. I had to block out where the entries and exits and stop placement were because it wouldn't be fair to the people who are currently in the course. But this was a valid signal generated just about 3 weeks ago. And if we look at a chart of the Canadian dollar, someone looking at this chart would say, well, Steve, there's really no trend here, so I'm not going to be doing anything in the market because the Canadian dollar is really just going sideways. Well, that's not true. According to our proprietary strategy and technique, we were in an uptrend and we actually generated a buy signal on the 31st. So you would have been privy to this information either through the email or through your studies. You would have been able to see it yourself. If you were a more advanced trader, you could have gone long that day, or if you wanted to wait and be more conservative, you could have entered the next day. Either way, you had a very nice trade and profitable trade. Once again, all of our members who are currently in our course were aware of this signal and were able to take it on their own if they wanted to. So if you do a Google search on us, you'll see there's a lot of feedback about people that are happy with everything that we teach at Specialist Trading. There are tons of reviews and accolades about how they're learning or how they've been able to trade for the first time with consistency. And in fact, one of our members recently sent us an email talking about his specific knowledge in the Forex markets. I'd like to read it to you. He sent me an email saying, "Hi, Stephen. At 77 years young, I have been day trading Forex for some time. I was hanging in there with good money management, but not really making money." Okay, does that sound familiar to many of you? Since discovering you and using strategy number 4 since September, I've locked in 873 pips and have 5 open trades sitting at 631 pips, all in the market. I missed a few. I only have to review the charts twice a day, which allow more trades and at lower risk than daily. Plus, I get to play golf and read more. What can I say but thank you for the education. I'm glad he stressed their education. Because as you see here, we're not a systematic company. We don't just want to force feed you signals and tell you to buy and tell you to sell. What we are providing you and all of our members is sound education that has stood the test of time. And then we format it to meet your needs, but ultimately you make your own trading decisions where you want to enter, where you want to exit, where you want to place your stop. He concludes here by saying, looking great for the future. And this is what our goal is, once again, to teach you how to trade with the specialist edge. All right, so let's recap. Excuse me. Here's what you receive once you become a member of my Elite Forex Trading College. 6 full weeks of trading tools and techniques. Remember, this is a live course. So we log on to the internet and then you discuss. We go over, the courses are anywhere from an hour to 2 hours long. We pick a day that meets everyone's needs. It could either be in a weekend or during the course of the week. And then we also teach you different proprietary Forex strategies. We share with you strategy number 1, 4, and 5. The exact stop placements, exits, and profit targets. We give you and provide the educational signal service, the email service I talked about. We give you conservative and aggressive versions. As a bonus, we throw in ATM and the Pet D. And these are only included in this course. And then on top of that, I think most importantly, you're getting 38 years of trading experience. All right, this is not just some course where you get a DVD sent to you and you have to hope and pray that you understand everything on your own. All right, trust me, I know what that's like because when I was struggling years ago, that's what I did. I would purchase things. And then once I purchased them, I knew right off the bat that I had no idea what I was doing, okay? And there was really no one to talk to or anyone to converse with because it was just some canned technique that I had no idea was going to work or not. What you get here is 38 years of trading experience. I'm there with you every step of the way. If you happen to have a question, You can always email and contact me, and I'll get back to you as soon as possible to try and figure it out with you. Remember, in closing, I'm teaching you the same thing my mentors taught me. Trading should be non-subjective. If you're struggling with your trading right now, ask yourself, is it too subjective? Are there too many variables allowed? Is it too many ideas involved so that it's basically just a guesswork type of thing? It should be consistent, all right? This comes, firsthand from my experience, because my trading when I first started wasn't consistent at all. As I stated, I would have a couple of really good trades, and then I'd have one terrible trade where I give everything back. So there was no consistency in my trading. My equity line, my equity curve looked like a roller coaster. It would go straight up and then straight down. Trading should be as simple as possible. How many rules do you have? Is it too convoluted? Is the logic just too tremendous, like you don't really understand why you're doing these things? It's just so complicated. You've always been taught that the more complicated something is, it's supposed to be more valid, or it should work better. But that's not true. Trading should have maybe 3, 4, 5 rules, and that's it. And then lastly, successful trading should make you a part of the process. Are you a part of the decision process, or do you have to wait for an indicator or someone in the chat room to tell you what to do, or even worse yet, some news event? You can't make a decision until the news comes out, okay? If you do make your decisions that way, you've taken yourself out of the game, and that, in our opinion, is a recipe for disaster. Now, you get all this information, the detailed instructions, 6 weeks, advanced trade management, Primo early trend detector, plus the 3 strategies, as well as my personal email address. You have access to me anytime you want, plus instant access. You can be up and running as early as today. If we sold all this information in the Forex College separately, it would roughly cost you close to $4,000. But we're discounting it to all the attendees today, at least 12%. We're discounting the entire college down to $34.95. The best thing about this discounted deal is that we're offering payment plans. So if we realize that's a little bit too much for you to meet in one lump sum, you can call up the good people at Pro Trader Strategies and devise some type of payment plan so that you can be up and running with just a small deposit, okay? If you're truly interested about taking your trading to the next level in Forex trading and get consistency in your trading, here's what you need to do. Go to protraderstrategies.com. You can email any one of their trading consultants at trading@protraderstrategies.com or call them directly at area code 310-598-6677. They can set you up with a payment plan right off the bat, and you can be up and running as I stated today. Now, if you're ready to jump on board with that discount, there is the link posted below. As you see there, you can copy and paste that onto your browser. But if you're more interested in just clicking that on, you can go to the chat box. You see there, the link is posted. And you can simply click that on, and you will be at the discount page, okay? I'm going to leave this information up here while I open up the question and answer box. And so I want to thank you all for waiting. If you had any questions, and I can open that up right now for you just real quickly. If you give me a second, I will open up the questions and see. Lorak says, the 38 years of experience does not match the picture you posted. Is it your grandson, Lorak? Thank you, Lorak. No, I think I have to really credit my mentors, because when I was first trading on the floor, as I stated, I was probably trading the way the majority or 99.9% of all traders trade. I was trying to pick tops and bottoms. I was using support and resistance, tons of indicators, waiting for the news. And trust me, it stressed me out tremendously. I couldn't sleep at nights. It was difficult, concentrating, because trading was just too stressful. And then once my mentors were able to teach me the correct way to trade, which is really about simplifying things and not relying on them, then trading became much more easier, and I guess I didn't stress out as much. So thank you. I think I probably have to owe that to my mentors. Trading should be extremely simple. In fact, I've often told my students that if you're trading correctly, it's like fishing. You basically do all the preparation, you get everything in advance, the correct pole, you get the boat, and you go out to the proper spot in which you know the fish will be, and you cast your line, and then you wait. You just simply wait. All right, there's nothing else to do. You don't force anything. You don't force a fish to, or make it bite the bait. You just simply wait. And that's what trading is like. You see the setups, all right? We teach you all the basic format. You look for a proper environment that there's going to be a valid setup. And then once you see it, you just wait. You decide how you're going to enter, or if you want to enter at all. If the risk is too much, you can decide to trade it more conservatively with our different entry plans or different stop placements. And if you still don't feel comfortable about it, if you want to use your discretion, then you don't take the trade at all. You see, that way you are becoming a part of the process. You're not having a system or some trading guru tell you what to do. You're making your own trading decisions, which in our opinion is what leads you on to becoming a successful trader, okay? So that's the way trading should be. Once I started trading like that, it became a lot simpler, and I guess I didn't gray as much, okay? Any other questions? Monty is asking, please send the recording. Yes, Monty, a recording I believe will be sent to you, okay? While we're waiting for some other questions, please remember, I know that Forex trading can be difficult, okay? I know that we've been taught a number of ways in which to become successful. In Forex trading, one of the most popular ways, but most ill-conceived ways, in my opinion, is to rely on news. We're always waiting, since the Forex currency pairs have to do with countries and different economic policies. We feel that, well, the only way to make sound judgment out of that is to wait for economic news. Well, in the 7 years we've had specialist trading and we've had our Forex college, we've never even once looked at news, and we continue to rack up really nice setups with our trades. We don't care about news. Now, once again, if it is that big of a difference for you, we never tell you have to trade if there is a news event. This is where you become a part of the process. So ultimately, whenever you rely on something to tell you what to do, you're taking yourself out of the game, you're giving your power away, and this ultimately will lead to failure. So what we want to do is put the power back in your hands by giving you sound, fundamental education, the way you saw in the testimonials, so that you'll be able to make your own decisions and get on that right road. Dijon asks, is it easier to become consistent trading stocks or Forex? Dijon, I see actually no difference in any of those markets, because once again, if you know how to listen to the market that you're trading, then all that is required is for you to discern what it wants to do, and then you just jump on board. So it's the same philosophy in any market in any time frame. As we showed you earlier with the PET D, the PET D will automatically color bars green or red for you. If all the bars are colored green, what is the market telling you? The market is telling you that most likely we're going to go higher. So your job is just to enter on the long side. That's it. That's how you become consistent. If all the bars are red, the market is telling you that most likely it's going lower. Nothing else, because this is based off the market's movement, off momentum. It's not based off of volume. It's not based off of economic reports. It's not based off of some support and resistance that are made up, what the institutions are doing. We don't care what they're doing. We're just listening to what the market is telling us. And if the market is coloring all the bars red, well, then it's most likely going down. And that means we want to just look at everything from a sell point of view. And that's it. So it doesn't matter if it's stocks, if it's Forex, it's the E-minis. All you have to do, your job is just to discern what the market wants to do, and then you just jump on board, okay? So I hope that that answers your question. Monty says, I bought your course, and I really like your stuff. Thank you, Monty. Thank you very much. And I'm sure Monty understands that this is all educational. Even though we provide you with strategies and signals, there's a lot of education. There's 38 years of education in our courses. And I'm there with you every step of the way. So thank you, Monty. I appreciate the kind words, okay? In closing, if there are no further questions, I just want to say I know as traders, most traders make a lot of resolutions in the beginning of the year saying, well, I want to do this by the end of 2015. I plan to make so much money a month, and I plan to get so much more ahead in the game, so much better than I did in 2014. And usually what happens is that you end up that year even worse than the prior year. I know this once again from firsthand experience. It's extremely depressing and discouraging because you put a lot of hard work into trying to become successful and consistent, and you don't see any results. If you really want to get to that level of consistency that you've been searching for so long in your Forex trading, strategies that not only apply to the Forex but can be transferred over into other markets, I strongly suggest take advantage of this really deep discounted offer. Remember, if we sold these things separately, they'd roughly cost you $4,000. We're dropping the price down 12%, $34.95, I believe, and then we also offer payment plans. So really take advantage of that. You're starting off in January. You can be up and running as early as today, and I'll be there with you every step of the way, okay? In closing, I want to thank you so much for attending today. I want to thank you for listening, and hopefully you can jump on board with the Elite Forex Trading College and become students of mine at Specialist Trading. Thank you so much for attending, and we'll see you next time. Bye-bye.